Hello viewers, in today's session we will discuss intercompany accounting, and by saying intercompany accounting it is different than intercompany trading. In trading we deal with the purchase orders and sales order, the inventory or stocks which are sold and purchased, but in intercompany accounting we deal with the journals normally, that can be invoice journal, can be intercompany journals in ledger, or it can be a payment journals. So we will discuss in this video how to set up and perform intercompany accounting for expenses. So we will start with the introduction of the topic, and then we will discuss about the uses of the intercompany, where it can be used, intercompany transactions or intercompany accounting, and then how we can set up in Microsoft Dynamics 365 finance and operation. And then we will discuss a couple of examples, and then we will proceed with the demo. So in the introduction, I would highlight that intercompany accounting is used for centralized accounting processes for the subsidiaries or branch offices. Intercompany accounting are used. So with the intercompany accounting, you can create a single entry that posts to multiple companies, provided that the setup is already done. And this feature in FNO provides features that can help you to set up the system and process the transactions, and then you can also trace the intercompany transactions. So in intercompany accounting, we use the following scenarios, starting with the lateral. Lateral means on the same level in a group of companies. A subsidiary perform a transaction on behalf of another subsidiaries and record them in corresponding company automatically. Both are child legal entities or of a holding company or a group of companies, and both are at the same level. But on behalf of one company, say A, B is basically recording or paying the expenses. Similarly, in the downstream, a parent holding company will perform a transaction on behalf of a child subsidiary company. And upstream is from bottom to up. That is, a child subsidiary company will perform a transaction on behalf of its parent company. So I hope these three terms are known now. Lateral, you can say on the same level. Downstream means from the parent company to child company or holding company to the child subsidiaries, and upstream is from child to parent, that is to holding company. Okay, so uses of intercompany accounting where we can utilize these kind of transactions, basically in ledger allocation, allocating balances or distributing amount correctly among different legal entities. For example, if you are recording the expenses, so for example, 50% expense of company A and 50% of company B. Company A is paying through the bank account, but to record the expense to only company A will be wrong. So properly allocating the balances along with the different companies or subsidiaries. Centralized payment also, like process payment in one legal entity on behalf of another legal entity. For example, to pay for the vendors, it can also be done. Financial journals, for example, in daily journals, vendor invoice journals, and payment journals, you can use intercompany accounting. So these were the uses, and the basic setup is simple. You need to basically set up a daily journal type of intercompany journal, and you can set up a different voucher, like in here you can see voucher series intercompany journal that basically distinguish among other vouchers inside the voucher transaction in ledger module. So this is also very important to segregate what are intercompany and what are not intercompany transactions. So first of all, this journal setup is important for performing intercompany accounting. And then we have to set up in module journal ledger. You go to the group posting setup and intercompany accounting form. In the intercompany accounting form, you need to basically set up the reciprocal relationship, which is once you set up any record from originating company to destination company, so then there is a button you can see at the top, create reciprocal relationship. So it will inverse the accounts and the relationship and create another second entry. So as you can see on the left hand side, the originating entity is USMF and destination is USRT. These are two different legal entities. Similarly, the reciprocal is USRT to USMF. So you can see on the debit account side and credit account side, there are two accounts of kind balance sheet, or you can say asset accounts type, which are intercompany payable and intercompany receivable, which are set up here. And then you have also set up the previously created or set up journal, intercompany journal you have defined here. And similarly, originating company and destination company both have the same setup type, and the main accounts are set up here. Only you will change the company names here, and automatically on the left hand side it is you can, if you click create reciprocal relationship, it will create another record down, and it will reverse the accounts. So the basic example now, for example, in the top you can see there is one voucher or the main transactions which is shown at the top, serial number 1, 2, 3, 1, 2, and 3. So here you can see that in USMF company, the bank is credited by $5,000, and the expense of USMF among this 5,000 is only 3,000 USD. So then 2,000 is paid for USRT on behalf of USRT. USMF is paying 2,000 from its own bank account. But at the same time, it will have a intercompany receivable booked by this account, which is $2,000. So it means, and then payable side of the other company, that is USRT, will be booked. So you can see here at the 4, 5, and 6 serial number, you will see that the USMF bank account is recorded with the credit entry of 5,000 USD, and then expense of USMF is straightforward 3,000 USD. But the expense of USRT, which is 2,000, is booked as intercompany receivable, which is receivable from USRT, which is 2,000. So it means that I have to receive from USRT 2,000, which is I am paying from my bank account for USRT. On the USRT, the related voucher is generated. The linkage and tracing is easily available when you will see in the demo. So on the USRT side, intercompany payable means I need to pay within USRT to USMF 2000 USD, which USMF has already paid on my behalf. And you can see the actual entry, which is USRT for the expense. 2000 is debited for the expense of USRT. So this is one of the voucher as an example, as a simple intercompany journal transaction. And next we have another example of intercompany invoice journal. As it was mentioned that we can use this in payment journal, invoice journal, or intercompany journal. So you can see here an invoice journal with its voucher in two different companies. So first one from 1 to 3, you can see vendor, yani payable is booked by 5,000. So this is a liability of 5,000 USD in USMF. But this liability is partially for the USMF and partially for USRT. So 3,000 is the expense of USMF, but 2,000 is the expense of another subsidiary company on the same level, lateral level. So that is 2,000 USD. How it will be booked? So you can see at the bottom 4 to 6. Vendor payable is booked 5,000, that is clear, and USMF is also expense of USMF 3,000 USD is booked. But here now once you are recording expense of USRT of 2,000, so at USMF side you have to receive 2,000 from USRT. So this is booked correctly, which means this is our asset which is to be received from USRT. And in the intercompany related voucher, you can see intercompany payable, USMF, USRT, which USRT need to pay to USMF is 2,000 as a credit, that is a liability. And expense of USRT is also booked 2,000. So I just need to book the above two entry, and the below entry will automatically be booked because my setup is done. So let's go for the demo now. So first of all, we will see we are in USRT company. So doesn't matter where you are basically. So based on the scenario, I need to switch to the USMF because USMF is basically paying on behalf of USRT. That is, USRT is United States Retail Company, and USMF normally use in Contos as an example for manufacturing. So what I will do, first of all, I will just show you the setups. So go to the general ledger module, and here in journal names you need to set up an intercompany journal with a different voucher, but type should be daily. So we will see in the journal setup. Okay, so here you can see this is intercompany journal, and journal type is daily, and you can see there are many journal types are available. So we will choose a daily journal type here, and the name you can give as you like. Be logical, so it can be can be recognized easily. Description is also intercompany journal, and voucher series or number sequence is also intercompany journal. So prefix is ICJL. IC for intercompany, JL for journal, and with the 6 digits. So this is the normal number sequence assigned to this journal. So this is first of all you need to set up this one, and then you need to go to general ledger, and in general ledger you need to basically go to the posting setup group and go to the intercompany accounting here. And intercompany accounting, I will just filter with these companies so that it is more simple for you to understand. Okay, here USRT. So here you can see, if you see these two entries, USRT from USMF to USRT, you can see these are the accounts. Okay, so the debit side is with intercompany receivable. On the credit side, the payable balance sheet account is set up. And similarly, you will create another for the destination company, and same account intercompany receivable in the debit side, and on the credit side, you will have intercompany payable. So now if you go to the reciprocal setup, so here you can see the accounts are the same, just companies are swapped here at the top. So it's easy to understand, and at the bottom level you need to basically designate or set up a journal type which already is set up. So you just need to choose the journal type here. So just now I will try to create a new record so that you can understand what fields are selectable. So you can select here the companies, and here destination company, and first is originating, the other one is destination company. And in debit account you need to select the receivable, intercompany receivable, that is the asset. And credit side you need to set up the payable, intercompany payable account, and the same will go here, debit and credit side. So you need to just make sure that accounts are unique, it is not duplicated, means both are not the same, to identify the transaction easily. So just to show you this one, and then I will go to the GL module. In the GL, if I go to the journals, okay, in journal, I will create a new journal and select from here the intercompany journal type. Okay, and I will record here, like for example, for 1st of July 2025. Okay, I will go to the lines. Just notice that I am in USMF company and recording an entry, expense entry for USRT. So take notice it in your mind. Okay, so I will go to the lines. Okay, in the lines, so as you can see on the left hand side here, voucher is generated ICJL as I showed you in journal setup. Prefix is intercompany ICJL for journal, and the number 6-digit number, it is auto numbered. So I will record this entry as 1st of August. Okay, and here what I will do, first transaction will be like bank transaction. I will select a bank, like any bank I can select here. Intercompany accounting example 1, for example. And I will credit this by 10,000, for example. Okay, and second line I will create. Okay, I will go to the second line, and here, and this entry is also on the 1st of August. So here I will select any expense account, for example, the other miscellaneous expenses. Okay, so description is auto copied, but here what I want to do is $6,000 are the expenses to be booked in USMF. But now the interesting part is I need to record expense on behalf of USRT also. So what I will do, I will change the company or legal entity to be USRT, and then I just need to select the expense account, in which expense account I want to book. So it is not mandatory that you select the same expense account. You can select any of the expense account. So I have selected here, which happens to be the same, and I will complete the balance to be totaling $10,000. Okay, so now on the debit side, all my expenses are booked with two different companies, and on the credit side, my bank is having an entry on 1st of August, so means 10,000 I am paying the expenses of two different companies which are subsidiaries. Now I will go ahead and validate this entry. Okay, so the validation is perfect, and I will post this entry. Okay, now you can also observe that the voucher series, voucher number is the same for this complete entry. It means it only one voucher is booked. Now the entry is posted, and I will go to the voucher of this transaction. Since the voucher is the same, so it should show me the voucher on the side of USMF, where currently I am in. So here you can see, so bank account is deducted or credited with $10,000, and other miscellaneous expenses for this company, that is USMF, are booked as a 6,000 USD, but 4,000 USD are booked in intercompany receivable, which I need to receive from USRT. So this entry is correct. Now, what happened on USRT side, the other subsidiary side? So how I can see that it is in the related vouchers. Once you are in the original voucher, then you can go to the related voucher. Okay, so in the related voucher, you can see another voucher is created on USRT side, company side, and here you can just click the voucher button, and you will see here the other miscellaneous expense which I selected in the journal lines is booked by 4,000 as debit, and credit minus 4,000 is booked as a liability or payable, which I need to pay to USMF. Since now I am in USRT, you can see at the top, it automatically switches once I click the voucher. You can see here the credit entry of 4,000 is booked, which is payable to USMF. So this is the complete entry. Once we now see at the top, the company accounts are automatically switching once I'm going back to my original transaction. So this is just happened on the intercompany journal side in ledger. Now let's go to the payable and make another example by booking an invoice journal. Okay, so in the invoice journal, I will create as well a new accounts payable invoice. Okay, and I will just mention this is intercompany journal. Okay. Okay, so this one also I will book on 1st of August, and you can see this AP invoice voucher created. And here I will select any of the vendor, which is just I am booking a liability or payable. So I will just select any of the vendor, and I will put invoice date to be on 1st of August as well, and I will say this is invoice 0108-2025 ICA. This is my invoice number, and also I will put the description and the credit amount. For example, now I'm making 9,000 as the liability, and here you see the accounts are automatically offset, so I will remove these. I don't need this. Okay, so here is the first entry. Vendor account is booked with the 9,000 as a credit. Okay, so the next entry what I will do is I will book my expenses. So I will select the account type as ledger. Okay, and then in the ledger, I will also, for example, select purchase expenses as a account. And on the debit side, I will say, okay, 5,000 for my USMF company, because now I am in USMF, so automatically USMF is company is selected. There is a field called company name. You can see here in account and in general tab in the company field, you can see USMF, and the same field you can drop it here. It is not automatically defaulted, so you need to just insert a column because it is already subledger, so it is understood you are performing this for the subledger side, so for the current company. So now I just drop it here. Okay, so this is the company field. I will place it here. Okay, so this is my second entry of 5,000 debit. Now part of this expense is I'm booking for USRT. So I will just select the USRT company, Contoso Retail, and here I will select the expense account. To be purchased expense, doesn't matter, you can change this account as well. So here you can see partial payment is the expense is 4,000. So the total expense is 9,000, which is booked as a liability to a vendor. Okay, but the expenses I have booked as per I have divided or allocated with different companies. So this is my complete entry. You can see the voucher number is the same because it is on the same date, and this voucher is balanced. Whatever total on debit side is on the credit side, so the voucher is balanced. So let's validate this entry. Okay, so this entry is validated. I will just post this entry and then we will see the effect. So we will go to the voucher now, and in the voucher you can see here that accounts payable other, which is mapped as by posting profile to that vendor. So that is booked by 9,000 as a credit amount, and then we have intercompany receivable, which is 4,000 that I need to receive from USRT because I have booked my liability on behalf of my subsidiary, which is USRT, and 5,000 correctly allocated to my current company. Okay, now on the other side, what I will find is through related voucher. Okay, in the related voucher, you can go and see here the purchase expense for USRT. Here we are now in USRT, so that is debited with 4,000 and credit is as a liability intercompany payable, which I need to pay to USMF. So this is very appropriately allocated expenses, and this is how intercompany accounting is done. So hopefully it is the explanation is clear, and if you have any queries, just put your comments on my video and I will try to answer those. Please stay tuned to my next videos. Thank you very much.